Hello and welcome to another update video about Dogecoin. With Dogecoin, we are currently probably in this small wave 4 correction. We talked about that yesterday here to the upside. But before we talk about that, let's just remind ourselves of the higher degree pattern here. My primary expectation, and that is purely because the trend hasn't shifted yet, and also from experience, this would be quite an unusual bottom. My primary expectation is still for another low here. We would need to hold, to keep this scenario alive, we would need to hold the 13.5 cent level. It's this high that we had back then, yeah? Above that level, I will move towards a direct breakout scenario, which doesn't mean, you need to wait. If you like Dogecoin and you believe it will go to the, to a new all-time high in the next bull run, of course, dollar cost averaging might be an option for you if you like this coin. From what I currently see, however, in the structure, I cannot with full confidence say that a bear market low has already been struck. The reasons are as follows. The bullish case would have to be that I see this here as a wave 1, this here as a wave 2. 1, 2. I would then have to count this move to the upside as another 1 and the move down as a 2, which means we have two 1-2 setups. That's fine. Yeah, I mean, you get these coins that bottom and you make 1-2 setup, 2-1-2 setups, and that's fine. The problem is that at the moment, the move to the upside here is not impulsive yet. I only have 3 waves up. I don't even have 5. So I need 5 waves in the first place anyway. That's the first problem. I only have 3, so I can't really confirm the low is already in. And also, other coins are rallying currently much more, which means I need to see some kind of signal, right? At the moment, I don't really see one other than it moves up a little bit. Yeah, so this is, again, a bit of a problem. The other problem is that this move to the upside here, I mean, this looks pretty much like a 3-wave structure, right? A, B, C. Of course, it could be a 1-2, 1-2, but it's just quite obvious as an ABC structure. The next problem is that if I draw the retracements of this wave 2 low to the wave 1 high, and then look at the retracement level, in this wave 2 we came down to the 88.7% fib level. That is lower than ideal for a wave 2. So from everything I can see, probability-wise, if I was trading this, I would rather focus on a coin. If I'm looking for a coin that's going to the upside, I'd rather be looking for a coin that has a more reliable setup. That gives me a clearer setup that didn't retrace to the 88.7% fib level. Maybe it only came down to the 78.6, because from experience, these coins hold support much better. Yeah, so all of this comes together, and it is just a very unusual structure to bottom out. It is possible, that's why we've got this alternative wave pattern on the chart, but my primary scenario is that this was just an ABC, this was a wave 4, and we're now coming down in an ending diagonal in a wave 5. 1, 2, 3, 4, 5. This is now moving up. There will be resistance, and we're going to talk about that now. So if I now zoom in and we take a look at this scenario as the primary, basically the bearish one, we can see that the move up is fairly corrective. I mean, you have a lot of overlaps. It looks quite messy. You can get away with counting it as an impulse if we get one more wave to the upside. At the moment, I don't have that yet. So in the previous video, we said we can maintain further upside in the short term. That's very important. You always need to, some people sometimes don't listen and they only hear what they want to hear. But I'm telling you, we can focus here further to the upside, which means maybe, yeah, at some point, I have to change my higher level assumption because the lower degree patterns will confirm a larger impulse, and then I have to change my my overall scenario, and I will have to make the direct breakout scenario my primary, which means that at the moment, as long as we're holding a certain support level, the uptrend is still valid. So it's of course tradable. And that is as long as we hold above 8.12 cents. That's what I mentioned to you in the last few days, I think. And this is exactly the level that we touched. So very soon we should see a reaction and ideally move to the upside. Or we are breaking below 8.12 cents. And then, yeah, I mean, maybe we have one more chance here to hold this channel support, but if we break out of this channel to the downside, then I think it's going to break down most likely. So we can follow upside as long as we're holding here channel support. Ideally, we don't break down below 8.12 cents. And then if we look at resistance, if this continues to move higher and if it becomes an impulse, not a problem, because in this pattern, it would be here an A, B, C pattern. And in the B wave, we currently have A, B, and the C wave up, and the C wave is an impulse. So 5 waves up doesn't really confirm here that a bear market low has been struck. It just confirms we have an impulse, which could be a wave C. That's why if in the next move down, we only make a correction, that would be a strong indication that the low is already in. So if we move up here impulsively, no problem. But if we then don't come down impulsively, but only in 3 waves, A, B, C, after that local high, then we can shift our thinking more towards the bullish case, okay? Where do we have resistance for this C wave? We have resistance at 9.58 cents and 10.3 cents. These are the next key resistance levels. So ideally at 10.3 or lower, it is turning around, moving down. Okay, and that's my update about Dogecoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.